Welcome to the Corporate Venturing Insider Series, where I interview top practitioners in the CVC world and learn with you the best practices and golden nuggets that they have accumulated over their career. In this episode, we will be learning from Daniel Grubbs, Chief Venturing and Investment Officer at PepsiCo. Daniel, could you take a few minutes to share your story and how you got to where you are today?
Thank you for having me. Like with most people in corporate venturing, it's not a straight line. I started in consulting and for years was working with companies that were small, medium, large strategics like PepsiCo, really in the consumer goods space, but also retail space. I transitioned over, came into the PepsiCo organization and came in with a background, obviously with consulting, but more specifically of really advising and working with companies, not just on the strategy and the growth agenda and innovation, but also very tangible kind of fundamentals around analytics as it related to our industry, category management, a lot of very particular subject matter expertise. So came into a part of the organization that was more on the emerging side of our business. So if you think about PepsiCo, we're a food and beverage organization, but even in that business, we have some large, very established businesses. Whether on the food side, it's Quaker Oats, it's Lay's, it's Doritos, it's our Frito-Lay snack portfolio. On the beverage side, it's big brands that you would be familiar with in carbonated space in terms of Pepsi and Mountain Dew, as well as Gatorade. But what we also had was more emerging businesses, as we would call it. These were businesses that we actually acquired in the prior, give or take, 5-10 years, that were beverages that had more natural characteristics, meaning they came from more natural sources, juices, organic nature of products, things of that sort. So it was Naked Juice and Izzy and coconut water. And it was basically alternatives to just traditional carbonated soft drinks, if you will. And these were businesses that we were very focused on trying to drive change with, and we saw a market opportunity such it led to the acquisition. I came into that group to help basically lead that organization, which we called the emerging brands business. Sizable. We had a target to achieve $1 billion over a certain extended period of time between the whole portfolio. And so it was really driving a lot of the strategy and sort of the development of how we were going to move that business forward. It required new ways for our business to go to market. It required new ways to speak to the consumer, even beyond the products that we were running and the businesses that we were running, which ultimately led to the idea of that we needed to be active from a venture standpoint. Well, there's acquisition opportunities and there's also investment opportunities. Yep. And in those days, it was very much more centric towards B2C, packaged good, if you will, things that you see and hear and feel, right? A little more straight down the lane. And we started essentially in that unit is getting permission to actually start investing. And the key thing there, what we really did is say, how do we leverage not just the big organization and the capabilities and the knowledge, but actually what's actually right here within these more emerging businesses. They were emerging businesses, but still north of 500 million, right, in collective. So it wasn't necessarily, they weren't small, but they were emerging in the sense of PepsiCo in that we had a lot of very similar traits and characteristics and knowledge that we could share over to the companies we were investing in, right? And in addition to that, was starting to push on the ideas that this needed to become a bigger corporate mandate. And so a lot of that turned into, we need to push this up and we need to spread this, not just to this area of our business and just our beverage business, but we need to expand this to the total organization. So not just for North America in beverage or healthier, what we would call healthier natural products and things of that sort, but also to our food side of our business or into potentially other capability areas. And that was about a good year of writing the Constitution. One year of writing the Constitution but we had proof points we could look to, right? Yep. And writing out the framework and the legal dynamics and the tax and control dynamics, all the fun stuff, right? And serving that up. And it actually had also become a topic and a consideration up to the board level, which was good. So it had actually gone all its way that way. And there was an alignment towards, let's drive this as a corporate initiative. And so that was about 7+ years ago, where we were, for the first 2-3 years, we were active doing it, but then it turned into much more of a corporate institution, if you will.
And that was structured as a fund?
No, off the balance sheet.
Of the balance sheet.
Yeah.
Okay. So I want to double click on a few things you've said, but one clarification question, was it 1 billion revenue or?
Yeah, I think it's a magic number.
So I want to double click on your consultancy background, which comes with a lot of discipline. What is part of that discipline you find very useful today as you do corporate venturing, you meet with startups, you decide which ones to invest? What discipline do you still use that you find most useful?
I would say that from the consulting days in particular, there's a number of things around frameworks are like a big thing, right? Obviously from a consulting standpoint, frameworks are nice and good, but that's really probably more as it relates to organizing ourselves as a ventures group and how do we think about going after the market. But also from a consulting standpoint around breaking down markets and understanding where it is today, where it can go, right? And what are the critical enablers to achieve those things? And understanding kind of that visual roadmap for how a market might evolve will be helpful when we go to talk to companies and kind of understand where they're at on that journey, but also that there's some spaces or companies who we probably know that there's some dynamics in an industry that we would typically do from a consulting and breaking it down and go, here's the enablers that are going to drive action or growth within this industry. And when we go into a space and try to assess it from a venture standpoint, we do the exact same thing, right? Which is, what are the enablers in this? And if there's obvious major roadblocks to achieving a level of success, we might identify that early and very quickly write the summary and go, this isn't necessarily a space that's probably worth our time, unless there's a fundamental change to a market. As an example, if we might think of a new consumer space that we might want to think about our organization moving into, but in the assessment of the space, if it's, you understand how, say, government subsidies work, and that manifests itself in terms of the P&L structure, we know who we are as an organization and what our profit targets are. That might not necessarily be. So we could go through a whole process of investing into that space and getting into the details and all that stuff. But actually at the end, we're probably going to be back where we started, which is actually, I don't think we're going to actually either.
And then you wasted resources on both sides.
So we spend a lot of that time up front really looking at these new spaces and going, fundamentally, is there fundamental something here that we can be comfortable with? That doesn't mean everything we go through that process, everything's a no. There's somewhere it's like, it's an unknown or it's potential if this occurs. Okay, then that's something that's pressure test. When we get into the individual company conversations, I would say the consulting background specifically, but also actually being an operator of PepsiCo businesses as well, is understanding going, when we look at P&L, and we look at the dynamics of the path and the journey, is understanding that each of those are required different decisions. And so we spend a lot of time right in that diligence process with these companies.
So there's one thing I find fascinating and hopefully inspiring for the audience is you would think a very big company like PepsiCo, a corporate venturing initiative could only come from the very top, from the CEO. But what you've done is you've started that activity at a smaller scale with a very clear vision of emerging businesses. And then you brought it up to a much more wider view and full corporate, and then got the buy-in, building on top of early successes. Can you share the best practices and maybe tips that helped you to do that? Because this is not small company.
No, yeah, and I'll definitely answer that question. But in that one piece of context, I always believe is that no corporate is the same. Even corporates in the same industry are never the same, because it's where's your position in that industry.
Yep.
How much of your balance is towards, let's say, an operating space or category that's in a growth mode versus it's decelerating, or what's the organizational structure? How does decisions get made? And so I can speak for who we are and been establishing what we did within there. In some cases, those things are, I think, relatable in other cases to other organizations. But in speaking with other corporates and stuff like that, every story is unique.
But you have an inspiring story.
Yeah, no, I say that because I really do believe it too, is that I've had to highly consider who we are. What's the culture and what's the DNA and the dynamics. And when for us, the key thing I think for us was working off of a basis of that we had proof points, right? And I think in anything, it's if you have something you can point to and leverage and use, right, it's useful. And it wasn't just that it was, hey, we're doing it, but actually we understand the intricacies of why something works or why something, maybe what we should do to evolve it, right?
Yeah. Well, the learnings are equally important.
100%. And I think that the thing is that there was a push down from the top also to say, actually, should we? And in that process, there was others who said, hey, yeah, let's be helpful to assess, should there be something? But what was good was that we said, look, let us help you. Let's inform you of what this means. Meaning spend time, a life in art, come live with us for a bit, understand it so that you understand what we're going through, such the recommendations we're delivering. And then the other key thing became there is that it's like you need a corporate sponsor, you need a sponsor, you need a champion. And we had,
how did you find the champion?
I think we had a few, and I think some of it came because we were serving up some of our initial investments and keeping already those potential champions aware, and we understood the spirit of what we were doing. And
that's what I wanted to ask. You didn't find champion, you build champions.
We build champions. And naturally, if you even go back, even back to the start, right, which was when you could make an argument for our organization, there was 10 years prior to us doing this that was fits and starts, right? Not necessarily of venturing per se, but also of, we have small businesses. How do we grow these small businesses within this organization? Or, hey, maybe we should test this model. Maybe we should test this model. So the nature of like test and learn, explore was always there. Venturing became a new form, but it also came very explicitly off of the back of, we were recognizing what the company had been doing in the past. So we weren't trying to ignore it and say, this is the learning based off of who we have been. And this is how we feel this is best suited for who we are, but also we're going to be very pragmatic and say, this is exactly what it is. This is what it, but here's also what it's not, and just be very honest. And I think some of the executive sponsors, appreciated that, but I think recognized it because we kept showing, call it traction results. And then I think it's in those situations, it's how much do you ask for or go after? And I think it's that you could ask for the whole kit and caboodle versus you could say is, let us keep stretching this and continue to show improve. And I think that was our approach, which let us keep pushing and doing this, always coming from the space of, we recognized who we were as a company, what the value this could potentially bring. Let us keep moving in there. Do you agree? Yes, then let's go in this way. Now, we're not going to ask for crazy numbers. We felt like here's the appropriate amount, and we'll continue to show kind of value. Because I always felt too, which was that this is a long road, right?
Walk before you run.
Yeah. And this is not going to manifest itself in 6 months completely. And I knew I was going to be in it for the long road. It's something I love, something I championed. And so it was like, let's set this up. Let's establish this. Let's work with those executive sponsors to also make sure that we're answering the things that they think are important, but that we're not going to take shortcuts. And we're going to stay mission focused. And we're going to continue to try to show results against there. And then 1 year we'll build upon the next year.
I think you haven't used the word, but what you described is transparency. You were very transparent. And one thing which maybe there's a tip here for the audience, you talked about inviting them in. Can you share how you did it, for how long, and so on?
Yeah. And if I think about just the individual companies, say we were investing in at the early stage too, it was having folks from, so this, what's probably important here too, is physically the location was not at the headquarters. We were actually based outside of the headquarters.
How far away from the headquarters?
Los Angeles versus New York.
Okay. Decent.
Pretty decent. But one of the things we would try to do in that process is cultivate visits.
Yes.
Right. With those. And it wasn't just to, and I think what's key here is it wasn't just to call it meet the investment companies and the founders and everything associated, but it was also in that time we would share everything else that led up to, say, an individual investment. So meaning, here's our perspective on the market, the space, the characteristics. We'd take them on tours. We would really make sure that they understood is that myself and a couple others who were really driving this was we were fully invested into this world, right? And we lived and we breathed it in not just what we did for our day job, but where also this was going. And then vice versa, we'd bring our startups to the headquarters and do visits in that regard and help other kind of key constituents feel like they were a part of the process. And I think at those early days, it's like, you got to have people feel like this isn't some extended thing that's outside of the core. And it's what always happens, right, in some organizations is, oh, this is someone's fun job, or this is over there, this is for a resume or whatever it is. No, you need to have them feel like they're invested in. And we've maintained that. So therefore then for the last 10 years, which is how I always see it as our group is a conduit to the organization. And how do we get them just as involved in breathing relationships with our companies, but also the VCs that we meet and the broader ecosystem. And it's we don't want to create a wall between us and the rest of the company and this whole ecosystem. It's have them feel like we're a part of it as much as possible.
I really like the word conduit. What was the biggest value? I'm sure you had many goals, but what was the biggest value of these visits when it was headquarters, corporate offices, visiting these startups? What was the biggest outcome that came from that?
The biggest, I think, appreciation, awareness, understanding kind of the individual companies and the capabilities and the technology or what they're trying to solve, but also then what that represents in terms of where the market is going, right? Yes. Because I think, and this happens a lot in corporates, is you're focused on your core business, which you have to, and naturally call it 90x% of the organization is focused on that. And you have blinders on, as you should too.
Like horses, you have to look forward.
You got to do this.
Yeah.
And as if you need a part of the organization who's there to say, is look, let's make sure we're also looking outside and keeping aware. And we saw that as the core of what we were trying to do for the organization. There's naturally so many things that you could say, keep here, we'll bring you this, we'll bring you that, or keep this attention. But I think it's also harder to measure, right? Naturally. It's harder to read and assess and kind of understand, is it delivering on what? And that's still to this day a big piece of this, which is we want to make aware and understand and appreciation for that market. Because naturally on the flip side, and this is someone who lived driving a business forward, which was you sell yourself on the products that you're selling and why they are the best and why they should, as you should, but without maybe a full appreciation of, call it, what the next generation could of that product be, or that solution, or your capabilities. And actually you want to keep driving scale and efficiency in what you're doing. But I think you got to find a balance also in saying is we should understand the competitive forces, or we should understand where the innovation's going and how do we adapt this innovation. And so I think as corporate venture capital, right, and an institution within an organization like ourselves and yourself as well, is there to help the broader organization kind of sense, feel, and understand how to adapt, not just with the strategy they have, but how do they pivot appropriately?
And in a way, this is a trade-off between exploitation of the current business and exploration of new opportunities. Today, do you do a mix of that, or are you focused on the exploration side?
Yeah, it's coming today. And I think it's interesting to think about today and even call it different elements in time over the last, say, 10 years. Is there was periods where there was I would say, more of a balance of exploitation, as you would say, a good mix and exploration. Just as an example is that we would pressure test and move into some new manufacturing capabilities, not to say we were ready to go partner or exploit kind of those things and bring them into the business today, but we'll see where those go. New category spaces, and we're not really sure how we want to operate within there. And we still do that, but I think there's even more purpose with the business in that exploration. So there was a period of time where it was, let's show the value in that exploration. So therefore the value of even just exploring. And now we're in the point of, we're going to be very purposeful in the exploration even before we even think of doing it. So the brief associated with the exploration.
So how do you create that discipline, knowing what to explore and what not to explore? Because at the end, if you're an explorer, it's about going where the organization hasn't been. And strategy is about deciding what not to do.
I think for us, I think it's also understanding is like we still have a DNA as a corporation. We still have the backbone of who we are, meaning like we're in the business of delivering on ultimately foods and beverages and enjoyment and taste and exploration, and sips and smiles, as we say. And that can lead to a lot, but it also means we're probably not some things as a core business. And so we don't need to just explore on a number of areas where, and I think being in the organization for a number of years, I have a sense for what those areas are. And then those are also discussions that we have with the investment committee, it's around, is this an area that we should? And there's this, sometimes they'll bring it up and I already pretty much know the answer, but in other cases it's, let's see, should we explore? And actually, I would say for more often than not, we don't go explore unless there's some alignment that there's going to be some value in that exploration. But I think just back to your question, it's just you have to know who you are. Are we really going to turn into a whole new entity realistically? No, it's probably not. It's probably not worth it. It might be interesting to me and to a few others, but that's probably not best use of
Makes sense. So part of investing in startups is it's sometimes very competitive. You have to move fast. You mentioned that you invest from balance sheet. How do you work with your investment committee? How did you design the investment committee to have enough speed to be able to move?
I think we, from the start, and just the story is, moved out of the business to say, look, I'm going to run and design this after writing that constitution, if you will.
I will double click on the constitution.
But in there, it was where we're at from investment committee. It's small, it's executive focused so that we can move quick. And we've stayed, even though that there's been a few folks in there who've changed seats and roles and stuff like that, we've been able to execute with high degree of speed and of sort of efficiency when called upon.
When it's needed.
When it's needed, but then we do meet on a regular schedule as it relates to updates and back to the point about exploration and territories and alignment, but also what are we seeing in the market?
And transparency,
right? So we have those meetings focus on that, but then actually investment decisions happen with as needed in that way. But there's dynamics too around how important is it to have folks within that investment committee who are, call it, closer to, say, that investment and things of that sort. And I think every organization is a little bit different. I think the way we've solved it is people who are close to that investment are involved, they're aware, they're knowledgeable, they pretty much have alignment, and I want to say buy-in, but buy-in to it. But when it comes to the actual investment itself and the transaction, that's the committee's responsibility and job, ultimately.
Now, I need to ask, because it's such a big company, when you say it's a small investment committee, how many people?
A handful.
Handful is 5.
Yep.
Okay, good. And do you need a majority for passing, or do you need 5 of them?
It's pretty much a unanimous kind of decision.
So consensus driven. Now, and here maybe I will challenge or ask a question about this. Sometimes you want to foster a contrarian view, the one where it's not obvious to everyone. How do you handle the contrarian view being the one that could win?
I would say I'm not out and my team is not out to make sure that it's a yes. So
that's a golden nugget. Very nice. In the last 2 minutes of our interview, I want to also ask about the future. What are you most excited in the next 12 to 18 months to invest in?
For us, the evolution of our beverage business is one that continues to be how consumers are moving increasingly into thinking about sustainable solution. So really anything that kind of continues to spark innovation in how to deliver beverage, but from what we would characterize as beyond the bottle. So meaning ways to reuse, ways to alternative vehicles to deliver the experience of what a beverage would do. In some cases, that means different ingredient bases. It means different soluble, different solutions. So on the ingredient side, but also in the delivery, right? And so that could also be with B2B organizations who are really pushing the envelope by trying to figure out more sustainable solutions. And that goes as well on our food side, but particularly in the beverage world I think there's a big opportunity in consumers' willingness to deliver on refreshment and hydration and functional benefits associated with their beverages that are not just your traditional, call it single-use vessel, bottle, but actually is that there's alternative forms of delivery. And we're very open and interested in that, tablets and powders and everything associated with that ultimately get to that same sort of experience.
Which is very meaningful.
Yeah, exactly.
Thank you for your time. Thank you.
This is
Shared a
great.
lot of golden nuggets and insights. And I'm really impressed about such a big organizations where you started from one place and made it all the way to the corporate level. Thank you.
No, thank you again. Thank you for having me.